welcome. So what we'll be doing today, this will be like a kind of like a mini course or a mini lesson, right? On some of the things we're gonna go on. I already did a fair value gap video, so we're gonna do on retail versus smart money. So retail trading, right, is literally turn this so it's small. So retail trading, right, is literally breaking retest. So right, let's say this is one zone right here, right? Remember, it's a way how you look at it, right? Let's say this is a zone, right? This is a retail perspective. All right, let's take this, put this at the bottom. So this is how retail trading looks, right? This is support, this is resistance, right? Retail trading states that if I'm here at support, this is supposed to push us higher, right? So I'm going from support to the resistance. Support, resistance, support, resistance, support, resistance, support, resistance, support, resistance. Now, once we actually break up outside this range, right? We can either get something that's called a break and retest, right? So we support resistance, support resistance, support resistance. We break out, so we get the breakout, then we get the retest of the level, right? To go back higher. So that's how retail trading works, right? We use a lot of supply and demand, right? So let's say supply and demand is on this level, just how let's say demand is here, supply is up here. Same thing like resistance is up here, support down here, right? It's just the way that we look at the market, right? Retail traders is something that's called like a bull flag, right? So let's say this is a bull flag would basically be something like this. So retail trading use a lot of patterns, right? Use bull flag, bear flags, bullish engulfings, stuff like that, right? So let's focus on this pattern. So this would be like a bear, this would be like a bull, a flag here. So we got a line here, and retail trading use a lot of like EMAs, right? EMAs. So this would be like a bull flag right here. Sorry, this would be like a bear flag. So it can be either both a bull flag or a bear flag, depending on how you look at it. So this would be actually a bear flag, right? So you get this flag pattern here, and then you get this. You see how it's like it's in like in a little channel. So that's a flag. So you got the pole and then you got the flag. So you see retail trading, right? You want to see it break out of one way. So you see how it's consolidate, consolidate, consolidate. Once it breaks out of this pattern, you're looking for a breakout retest to go lower. So I'm saying, so that's basically retail trading, right? It's just the way you look at it. Retail trading, you use a lot of bear flag, bull flags, right? Engulfing patterns, right? Breaking retests, support and demand, supply and resistance, right? Using the EMAs, exponential moving averages, the 9 day, the 8 day, the 5 day, the 20 day, the VWAP, right? That's retail trading because you can access that information in the books. What I trade, right, is smart money concepts, right? Smart money concepts is basically we're using smart money techniques. That's what it stands for. Smart money concept, SMC, is literally smart money techniques, right? So we use things like fair value gaps. We use things like equilibrium. We use things like order blocks. We use things instead of a brick and retest, we have other things, right? Other reasons to get into the plays. Other just how retail traders use bear flags, bull flags, bullish engulfings, candlestick patterns, right? All of these things, right? The morning star, right? The head and shoulders, right? The inverted hammer. All of these things we use those are retail concepts. We use smart money concepts. So equilibrium, changing the states, order blocks, fair value gaps, inefficiencies. The market has to do four things at all times, which is generate to liquidity, right? Generate the liquidity is literally the reasons why the market moves, right? So the generate the liquidity is literally is generating the highs and lows, right? Generating the highs and lows. That's the first thing the market does at all times. Understanding smart money concepts, right? That is going to constantly create the highs and lows, right? The second thing the market going to do when it comes to smart money trading is it's going to hunt the highs and lows, right? So the highs and lows that recently gets created, the market is going to and then hunt that high and that low because the highs and lows is the liquidity. The highs and lows is where most people put their stops are, right? So that's why it hunts it. So the first thing it does, it hunts the liquidity. Sorry, it it creates the liquidity, highs and lows, then it hunts the liquidity, it hunts the highs and lows, and then it rebalances to an inefficiency, right? So that means it rebalances. That's when you get the pullback. It pulls back to an inefficiency, like a fair value gap or any PDA range that we use. Changing the state, order block, fair value gap, breaker block, SMTs, all of those things, right? It's pulling back to an inefficiency. The last thing I'm going to do is pull back to equilibrium, right? Equilibrium of the range, right? Equilibrium is literally, let's say we actually have a box. Let's say from this high to this low, right? If you use your fib, you draw from the low to the high. So equilibrium is literally going to be this 50% range right here. So you can actually expect once it create a high, so once it creates this high and low, you can expect it to actually come back into this 50% range, right? Because you want to get your longs underneath 50%, because if you're buying, so break this down. So the upper half, if you're in a range, right, from low to high, and you want to find the quadrants, the upper half is literally a premium, which means it's expensive. You don't want to buy when things are expensive, right? You want to buy when things are in a discount, right? So anything below the 50, right, that's a discount. So if you're above here, if you're above the 50, you're in a premium, right? Your best sales, right? Your best short position is going to come when you're in a premium, right? But when you want a long, right? When you go up, the best long positions is when you're buying in at a discount. So that's how we look at the market, right? Retail trading versus smart money trading, right? So let's get it. I hope you understood. If you need any help breaking down what retail trading versus smart money trading is, just comment below. Need more help, and I will go into a deeper dive. Let's get it.